Hello and welcome back to our Thematic Intelligence podcasts. I'm Emma Sturdee and I'm joined here with Sapna Maheria, a research director with a breadth of experience including research in market strategy and acquisition analysis. I'm also joined here with Chris Papadopoullos, a senior analyst and our resident expert in ESG and sustainable finance. They have both kindly agreed to join this episode to discuss our latest reports on global M&A deals in 2023, which looked at the top themes in each sector. You can find this report on the Intelligence Centre and Report Store, and I highly recommend that you check it out.
Hey, welcome. Thanks for joining this episode. How are you guys?
Great, Emma. Thank you.
Very good, thanks.
Thanks. Well, good for joining. So, after reading your report, I found some of the insights really exciting. I was particularly interested to ask you how the M&A landscape has evolved, especially in response to global economic shifts over the past years.
Sure, Emma. So if you look at the M&A landscape in the last few years, it's been heavily impacted by factors like geopolitical tensions, technological advancements, for instance, artificial intelligence, right? And in fact, until a few years back, COVID-19 was a big theme as well, right? So a lot of shifts have been witnessed by the M&A markets in the last few years, and companies have sought strategic acquisitions, to enhance their resilience, to enter new markets, to de-risk their supply chains, capitalize on the digital transformation trends, etc. So additionally, there's also a growing emphasis on sustainability and ESG focused deals, reflecting on a broader shift in the corporate priorities, right? Overall, if you look at the M&A landscape, it continues to adapt to the dynamic global economic environment. Now, in line with these evolving trends, we saw an interesting development in 2023, right? I think for the first time in the last 5 years, the energy sector surpassed the technology, media, and telecom sector to record the highest M&A deal value. In 2023, there were 3,500 plus M&A deals worth $700 billion in the energy sector globally, which is roughly $150 billion more than the TMT sector, which stood second in the list. In fact, 2 out of the 3 biggest deals in 2023 were from the energy sector, both being valued at over $60 billion. Now, while energy sector deals, grew because of the strong push in ESG and energy transition themes, M&As in the TMT sector, on the other hand, really fell because of the growing geopolitical tensions, economic uncertainties, market volatility at large, and growing regulatory scrutiny as well.
Thank you. That's really insightful. In regards to your analysis on the thematic drivers for M&A market, I think it's of particular importance to our listeners. Could you possibly share some of the insights on the top trends?
Oh, sure. So typically, if you want to understand what are the top trends in a sector, you must look into the themes which are driving M&A activity in that sector. So if you look back at 2023, we saw shale top the charts in terms of the themes driving M&A deals by value. This theme alone accounted for M&As worth US dollar 180 billion plus. Right, we observed a strong shift towards the ESG themes. By ESG, I mean environment, social, and governance, so sustainability at large, and this including climate change, renewable energy, carbon capture, energy transition themes. Right, increasingly there has been a great focus on ESG environmental component, with a shift from a voluntary regime to a mandatory one, largely driven by the government mandates rather than the consumer pressure. And a host of new environmental laws are in pipeline, as well as more state support and investment in the clean energy technologies. Companies are investing in renewable power generation, and some oil and gas majors have also diversified into low carbon hydrogen and biofuels themes as such. And if you look at it, from other thematic pillars, right? So aside from, say, ESG, there are other themes, other macro themes like supply chain disruption, emerging economies, which also came on within the list of the top 10 themes driving the M&As in 2023. And from technology perspective, it was connectivity, fintech, big data type of themes, which topped the charts for the top 10 themes driving deals in 2023.
Thank you. So we in thematic intelligence have a focus on tech. So I was wondering if you could tell us how you see the role of technology themes in shaping the current trends and opportunities in the M&A markets.
Sure. So AI, basically artificial intelligence, right? It remained in news almost throughout last year, generative AI to be specific. And for decades, we've seen, artificial intelligence has primarily been the territory of universities and corporate R&D labs. But the recent progress in machine learning models and computing power has made it possible for AI to solve some real life problems. Right. At Global Data, we estimate that the total AI market will be worth US dollar 984 billion by 2030, implying a good 37% compound annual growth rate between 2022 and 2030. Right. So we are practically moving into a corporate era defined by AI. And so we saw a similar trend show in the M&A markets as well. So if you look at the deals, the M&A deals specifically that happened in 2023, the most famous one was Microsoft investing US dollar 10 billion in OpenAI in January 2023. Now, although this deal is still under scrutiny by the FTC and the CMA, which is UK's competition regulator, to evaluate whether it should be classified as a strategic partnership or the acquisition of controlling stake. And another big deal was basically Cisco's acquisition of Splunk. So this happened around the time of September last year, and Cisco announced their acquisition of Splunk, which is basically a software observability and cybersecurity firm. This is again a big deal of the ticket size of $28 billion. And with this deal, this is basically Cisco's largest acquisition till date, and this is expected to create one of the world's largest software companies. But apart from artificial intelligence, which we saw really trending the charts when it comes to technology themes, there were other interesting themes as well, like connectivity, fintech, streaming, and industrial automation technologies, which also drove a lot of interesting deals last year. Also within technology sector, many a times we don't really look very deeply in media, but then at Global Data we do. So within media sector as well, there were some interesting deals, right? So there were two interesting ones which were both driven by the streaming theme. One of them is basically the Walt Disney's acquisition of the remaining 33% stake in Hulu, which is an American subscription streaming service. This was valued at US dollar 9 billion. And then there was Endeavor's Group and WWE's merger as well. So this is a merger of two iconic complementary global sports and entertainment brands, which is UFC and WWE. So a lot of interesting deals, many of them driven by pure technology themes also were observed in the last year.
Thank you so much. That's really interesting. I just wanted to go back to how you were mentioning previously about the ESG factors impacting the M&As. Chris, what do you think then of the impact of ESG considerations on M&A strategies?
So there's a couple of ways ESG affects M&A. So we've just done 14 reports looking at net zero strategies in different sectors, and so from those you can really see that pretty much every major company in every sector now has a net zero strategy, and those strategies aren't just marketing anymore. As Sapna said, there's a lot of regulation and policy drive around this. So corporates are really starting to act on these strategies now. And the sort of two ways that they act on this is one, they just want to get into a new sustainability related product or service, right? So they want to offer something that can, I don't know, help other companies track or reduce their emissions. And the other way is that, they're just trying to adjust and survive. So, a big energy company buying a renewable energy company or a massive car manufacturer buying an electric car maker or something like that. They know they've got to adapt over the long term. Now, if you look at the two, I mean, I think Sapna mentioned there was two sort of key massive energy deals last year. So it was ExxonMobil acquired Pioneer Natural Resources and Chevron acquired Hess. Now, there is a sort of, I know that those are oil companies buying other oil companies, but there is an environmental angle to this, which is the sorts of oil they're gaining access to is low carbon intensity oil. And it sounds a bit ridiculous if you've not looked at this before. But we did a net zero in oil and gas report last year, and it showed that something like 15 to 20% of emissions from oil and gas, it's not actually from, it's not all the emissions are from the burning of oil and gas. Some of it is actually from the extraction of oil and gas from the ground. And so what these deals do, it enables the oil companies to reduce those emissions. So although, okay, yeah, people are going to go out and burn this oil, and you'll still get the emissions from that, but the emissions from the extraction process itself, it's easier to minimize with the sort of oil fields they're investing into. And I know that sounds sort of funny because it's still oil, but that's the sort of stage that the oil and gas sector is at. But more broadly, I think what was really interesting about this report is that ESG beat AI because AI was so disruptive last year. It was hugely disruptive, and it's got so many unknowns attached to it. AI could put you out of business, or it could just be a fad like the metaverse was. Whereas ESG, it's been around a while. And it's a sort of slow burn, it's all regulation based now, and we can see when those regulations are coming in, and if new regulations are coming in, we can see politicians talking about it a couple of years before, so we get a bit of advanced warning. So I thought that was really interesting, that this energy transition theme and this ESG theme, it's been going on in the background, but it's still big. And actually, it's probably going to pick up a bit in the next couple of years, because although most companies and countries have sort of 2050 targets, there's a lot of intermediate targets around 2030, 2035. So you'll start to see big corporates acting on that. And of course, the corporates in this space, big energy companies, big industrials companies, they've got lots of big machinery, lots of big capital investments there. These are big, expensive deals. So they do push those deal value numbers up.
Thank you, Chris. That's really all very interesting, and it'll be so exciting to see how it develops in 2024. Do you think there are any regulatory trends or policy changes that you believe will significantly impact M&A activity in 2024?
Mm-hmm. Well, actually predicting, specific regulatory trends for 2024 is a little challenging, but regulatory scrutiny on M&A is likely to continue shaping the deals landscape, right? We saw a similar trend in 2023 as well. So antitrust concerns, especially in the technology sector, may influence the approval processes and impact the overall deal structures. Governments worldwide, we've seen that they are increasingly focused on addressing the potential monopolistic practices and protecting fair competition within their countries. Also, themes like geopolitics and evolving data privacy regulations will continue to play a role in shaping the regulatory environment. Now, if you closely look at last year, we saw many big ticket deals actually getting blocked by regulators, right? So for instance, the Adobe Figma deal in December last year, both the companies mutually agreed to terminate their $20 billion merger. And because they concluded that there was just no way or no clear path to get the clearance from the Europe and UK antitrust regulators. And on a similar note, in August 2023 as well, Intel and Tower Semiconductor mutually again agreed to terminate their $5.4 billion merger agreement. This was again because Intel couldn't get the necessary approvals from the Chinese regulators in time. But yes, apart from the regulatory trends and policy changes, we feel that there are some other themes which will be crucial for companies to look at when it comes to their M&A activity in 2024. And I would just quickly want to cover those. So just 4 of these themes basically. So one of them is, I think the most interesting one is supply chain disruption. Now, in the last few years, we've seen that the era of efficient supply chains has been splintering, right? So instability and conflict, these trends are becoming the new normal and we expect it to stay that way for the rest of the decade, and hence it really splintering the supply chains that have existed so far. So we see that onshoring, reshoring, and nearshoring will become commonplace. And by 2035, many supply chains will incorporate more of robotics and industrial automation, data analytics, and artificial intelligence, right? And all of this will be key. So M&A strategy basically will be the key means for companies to really deglobalize and de-risk their supply chains. So it's more of a long-term trend, really, but we expect it to to show in the thematic drivers for this year's acquisitions as well. Number 2 on my list is, of course, ESG momentum. I think we've discussed this quite at large already, so I'll not deep dive into that one. Then number 3 on the list is basically artificial intelligence, right? Now, this technology created an enormous amount of hype last year, both in the financial markets and among the wider public as well, with the launch of OpenAI's GPT-4 in March 2023, right? And businesses are eagerly testing their use cases to improve their productivity, streamline processes, and ultimately cut their operating costs. So we expect key players spanning across the sectors, no matter which industry we talk about, to consider making more acquisitions in 2024 of companies that specialize in machine learning, computer vision, data analytics, synthetic data, retrieval augmented generation, context awareness, and other AI technologies as well. So this momentum will again continue in 2024. And the last but not the least is digital transformation at a broader level, right? Digital transformation still continues to be high on the CEO's priority list for 2024. And this is reflected in the growing trends towards investments that allow businesses to tech enable their operations, so primarily around areas like cloud computing, industrial Internet of Things, predictive maintenance, 3D printing, cybersecurity, right? So all these themes we feel will continue to drive the M&A activity in 2024.
Thank you so much. I think that is sadly all we have time for today, although I'm sure we could go on for a very long time. But thank you so much for joining and sharing your insights, and I hope you have a wonderful day.
I hope you enjoyed this episode. If you'd like to know more about global M&A trends, make sure to check out our latest report on the Intelligence Centre or the Report Store. Thank you.